Hey, what's going on, guys? Thanks for joining us again on another Tuesday Talks podcast. I am your co host, Dan from Pekoe Mortgages. Pekoe Mortgages is an online digital mortgage brokerage, and we help Canadians coast to coast in getting mortgages and getting you into your home.
All right, welcome to another episode of Tuesday Talks. This is clearly a very important episode because Dan
Breaking news
seems to
here.
be he
Breaking
was in
news here.
he was in a very big, very important conference, and now he has gone into a boardroom to have this discussion.
Yes, yeah. I mean, I had to step away today. I mean, it's like the sky is falling right now. So, uh, we're all hands on deck to just try and figure out how do we navigate this 0.25% or 25 basis point increase from the Bank of Canada. I can't believe it happened because no one saw it coming. No one predicted this. And I have no idea why they would have just thrown this out at us at 25 basis points because really the sky is falling and
Yeah.
I don't know how we're all going to start holding it up. So, but okay, so, I'm playing it off pretty lighthearted, but to be honest, there's been a lot of emails and phone calls today. I've been fielding, and our team's been fielding, just related to this announcement, because obviously sensationalism sells, right? We can see if you just Google Bank of Canada increase, everyone's talking about it and what it's going to do. And you and I talked about it yesterday on, what is this going to do for the marketplace? Is it time for panic? But we kind of knew this was coming. We were at the sort of lower boundary for the overnight lending rate. And I mean, it's up to 50 basis points now, so 0.5%. Likely variable rate increases are going to, or variable rate mortgages are going to start increasing, or at least that discount to prime. Prime's going to go up. That discount might go away a little bit, but it just means that it's important to kind of run the numbers and see where what really is going on. It's My opinion is stay variable still. We're in March now, so we're ending the first quarter of 2022, and last year people were screaming that we'd see a ton of increases by this time. We haven't. So that's kind of what's going on, Harris. But it's crazy. Like one of these, so CBC came out with an article just an hour ago, and there's already 2014 comments. There's a lot of people interested in what's going on and what does this mean for rates. So anyway, it's my opinion is nothing really to be too concerned about. We knew it was going to happen. We know that there's likely going to be a few more on the horizon, but does that discredit variable rate mortgages? No. I mean, there's some variable rates like adjustable rate mortgages, like TD, for example, where they can set the payment to be fixed. So let's say it's your payment's $2,500. You set it as a fixed payment of 25. The only thing that changes is the ratio of principal to interest on that payment. You risk getting into negative amortization if things go too high, but it's a very low likelihood. So if someone just wants a static payment that's not going to move, that might be an option.
Yeah, I mean, but also, I think that does I mean, I don't think you could. You're in a better position to know than I am. But does this really change people's qualification? Aren't people qualifying at a higher rate anyways? Like, there's that stress test involved, so it's not like.
Yeah,
And that's what like
yeah,
that the stress test was created for situations like this where if the government has to increase interest rates, they can, and consumers can still take advantage of lower interest rates.
yeah, 100%. So it's not making the affordability or that stress test any more difficult, right? Because right now the mortgage qualifying rate at 5.25 is a lot higher. So you've got a stress test that is way higher than your variable rate mortgage right now. If anything, so right now 2.45% is your prime rate with most lenders. We'll probably see that overnight jump to 2.7 with the large banks, and then there might be an adjustment. But yeah, it doesn't change anything when it comes to your approval amount. If you're approved for a $500,000 mortgage yesterday, guess what? Today, tomorrow, you're still approved for the $500,000 mortgage. Doesn't change it.
You're just paying a little bit more in interest. But even with that, like variable interest, variable mortgages, like, I mean, a lot of people, they're like, oh, this is why we go for fixed. Well, I mean, you're still cheaper than fixed, and it's better to save money now than maybe save money in the future.
Exactly. So I just shot a few videos to clients too, just saying, look, we've got two bets that we're making. One bet is that you're not going to break your mortgage in the 5-year term. If you lose that bet, then you're in for a pretty substantial penalty if you do fixed, right? That's based off of your contract or the posted rate. It's called an IRD penalty or an interest rate differential, much higher than a variable rate. So that's just on the penalty. Let's just hope you buck the trend, because the majority of Canadians will make a change within 5 years, but maybe you're not one of them. Now, the other bet is that the fixed rate that you lock into is going to save you money over the rest of the term. Let's just say you just got a variable rate mortgage 3 months ago, and you've got 57 weeks or months left until your term's up. So you're in a 5-year term. Is locking in today at a rate that's probably twice as high as a variable rate, is there enough time? Is like long enough in order for you to actually come out ahead? No, because I've done the math on it. It's going to be pretty unrealistic. So yeah, you're paying that premium. And what are you going to pay for that premium? Like, what is that peace of mind worth to you? You know, thousands of dollars, just so you can be like, oh, thank God I locked the rate of a variable rate. No, I mean, but for some people, yeah, they would prefer that. And that's the premium you pay for wanting to lock something in and have that peace of mind.
I mean, it's also, I feel like the situation is a little bit more dynamic too. It's like, I mean, a lot of people are like, oh my God, there's just the interest rate difference. Well, it's not even just the interest rate difference. Like not only do variable rates have to catch up to fixed, they have to go above the fixed, right? So if you're like paying one percentage lower, and has to not only go 1% above, but you also have to consider when it was 1% lower, you're paying a lot of the principal down. So it actually on the tail end of it has to go higher than a percentage for long enough for you to actually pay the same amount of interest in over the course of the mortgage.
Yeah, you're 100% right on that. So I mean, it's, you know, when you run the math on it, it doesn't really make much sense to go variable. But you know, I also think that there's a part of the population that went through mortgages in the 80s, and we saw where interest rates were in the 80s, and there's a little bit of a fear in there that, oh, we could experience what happened back then. Again, I don't think that's really where rates are going. But, you know, we've got today a little bit of a increase in that variable rate. And if anyone out there is watching, sky's not falling. You should just kind of really sit down before you make any, you know, snap decisions on locking in. You know, maybe just run the math on it. Reach out to your broker, reach out to a banker, reach out to your mom, your dad, whoever, your neighbor. Reach out to someone, get someone's opinion on it, because chances are they've looked at the numbers, and there's no real need to panic today.
Yeah, I mean, I wouldn't say reach out to anyone, right? I respectfully disagree in that if your neighbor is saying go fix, don't listen to your neighbor. I would still go back.
Yeah, unless all your neighbors are mortgage brokers. Then
unless Dan's your neighbor, you know, that's the only reason you should be reaching out to your neighbor.
Yeah, Igor, if you're watching this, my neighbor Igor, then yes, reach out to your neighbor. But otherwise, yeah, I think you're right. You want to get someone's professional opinion on this and someone that's actually run the numbers. So I'm working on a couple spreadsheets, and if someone wants something, reach out to me. We'll break it down in numbers, and yeah, don't worry about it. Anyway, I got to get back to my emergency meeting. All hands on deck here. We're doing some stuff, so I know it's not a Tuesday talk; it's more like a Wednesday emergency talk. But
So Wednesday
thanks for
whim,
jumping on.
but yeah.
Wednesday whim. Okay, so yeah, well, I'm excited for our next guest, which we're not going to talk about, but we'll just bring them on, and yeah, we'll see you on the next one. Thanks, guys, for tuning in.
Take care, guys.